crypto prices rebound, and Hong Kong gets ready to support crypto trading. We discuss all this and more in today's Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. As always, we'll start with a market update. Over the past 7 days, it's been a welcome change for crypto investors, with BTC and ETH, and indeed the whole market, going higher. So that's been a rarity, it seems, in recent times. 5% higher for BTC, and ETH is also 5% higher. We've got BTC currently trading a bit above 28,000 US, and ETH has climbed above 1900 USD. So it still looks like the month of May coming to an end. This will be the crypto market, BTC and ETH, all of their first monthly price decreases for 2023. After the first 4 months of this year were all monthly gains. But it looks like we're ending the month at least with some greener price action. This has all basically been instigated, this recent rally, by the news coming over the weekend that the US government and the Treasury have basically, and all the parties in Congress have come to an agreement that they are going to raise the debt ceiling for the 79th time in US history. So they've reached an agreement. Essentially just means that the US isn't going to default on its debt, which it hasn't yet done so far. So far, so good. So the market's rallied. All the US stock market, it's all risk on assets, including crypto, rallied on the back of that news.
Just that on there, Matt, I saw that I think it was a 2 year to push to raise the debt ceiling to 2025.
Yeah.
So I think it's going to sort of kick it down the can down the road a little bit longer, and I think we're going to be interesting to see exactly how they're going to respond to a lot of the cuts and working out how they're going to come together. And I think we're going to see more of this in sooner rather than later.
Yeah, for sure. I think it's going to be another bunch of headlines in 2 years time for sure, Nick. I'll hand over to you to bring over some of the bankruptcy news. We know there's a lot of cleanup still going from 2022. So I think there was some updates last week, weren't there?
Yeah, so the biggest one here was Celsius Network, who are notoriously, faced bankruptcy for a lot of the, downfall that happened in 2022. So there was a company, Fahrenheit, who have had the winning bid in sort of the court approved auction that was going on. And this is actually looking at potentially taking Celsius and getting it more involved in crypto mining to try and rejig the business and to try and get some capital back to creditors. So this is a big one. If you're a Celsius creditor, definitely suggest looking into Celsius. You might have received an email to keep up to date with what's going on if you had funds on the exchange. But it looks like they're doing some sort of potential issuing tokens potentially as well. So some good news if you're, from Celsius, that at least there's some step forwards here and there's some companies willing to take on Celsius.
Yeah, nice. Definitely keep updated for anyone affected.
Another big one there was also FTX. I'm not sure if you saw all the ramblings about FTX 2.0, but essentially there's a bunch of the creditors for FTX that are looking to potentially restart the exchange. Kind of at the idea that there's some value there, and this is a way to claw back some more money for creditors. Not sure this isn't set in stone or anything, but again, if you're an FTX creditor, definitely suggest you to keep up to date, with the official administration that's going on and the liquidity process that's happening. So yeah, if you are a creditor there may be some glimmer of hope, although it's still unsure exactly how much value there is going to be, and if anybody even wants to transact on an exchange that is known as FTX anymore.
Yeah, for sure. I think the one thing traders always really, went to FTX, captured a lot of the demand from traders, and mainly because of its matching engine and its technology. So using the actual platform was, for many traders, they said anecdotally that was by far the best exchange on the market. So, maybe some of that technology does have value, but I guess in the meantime, once FTX has gone down in November or whatnot, all these other exchanges have had 6 months, by the time this possible exchange launches, maybe a year to actually improve all their matching engines and technology. So maybe that point of difference might sort of subside for FTX anyway. But yeah, again, check your emails if you're affected by if you were an FTX user.
Perhaps maybe the biggest point I reckon this week that I saw was China's crypto reopening. I'm not sure how many China bans you've experienced, Matt. Probably a couple more than me, but yeah, and another big one that is potentially seeing them open back up to cryptocurrency via Hong Kong. So this was making the news this week with the Hong Kong Securities and Futures Commission. They announced their proposed sort of digital asset guidelines. They're going to come into force, but I think June 1. So it's sooner, I think, than more people anticipated. And this means that retail investors will be able to trade BTC, ETH, and a bunch of large cap cryptocurrencies that meet certain different guidelines.
Yeah, for sure. I think this yeah, it did surprise a few with the quick timing of it, and all throughout the same time. I think a lot of people are thinking of this as, China's, reopening a crypto, or warming up again to crypto at the same time as the US seems to be getting a bit more hostile to the industry. And, we have got some things happening at the same time as this June 1 opening that may suggest this is all sort of, yeah, there's a lot more involved than just Hong Kong opening. Like we've had on I think Chinese, their main, news channel, basically their only one, the state owned one, was covering Bitcoin and NFTs and crypto. And then there was also news over the weekend that a white paper was published from, again, some sort of state, some branch of the government about, Web3, which, for China is a bit ironic, kind of the complete opposite sort of things going on there. But this is all happening. I think Binance CEO did sort of mention this, that, it doesn't seem like a coincidence that this is all happening at the same time. It seems like something that's planned. So again, I think the consensus out there, and I believe this too, is that China's more just, again, using Hong Kong as just a testing ground to see how much demand there is from businesses to enter Hong Kong and set up shop there, as well as just interest from retail. That way they get to be not entirely out of the crypto space, which they have been for a while, or at least, on paper. And then also it saves them from, I guess, going all in, and for the reasons that they don't like, all related mostly to centralization and a bit of consumer risk as well. They don't get to then reopen crypto in mainland China, which they're very, very hesitant to do.
Yeah, I was really interested to see the tokens that were supported. So I was reading in between the lines here and seeing what's the requirement for these, and it looks like it's got to do with whether they're included in like major indexes. So the names here that OKX exchange are looking to support are, of course, BTC ETH. We're seeing Cardano, Matic, Solana, Polkadot, Uniswap, Link, Chainlink, even Sandbox, Litecoin, AVAX, Axie Infinity, which is a gaming coin, which I was surprised to see in there too. And then we got things like Atom, and then I think XLM. So we're seeing a lot of different cryptocurrencies, mainly layer ones, but some sort of gaming tokens in there. So I'm sort of expecting them to have this initial, and then we're going to see more added to these indexes and potentially more introduced over time.
Yeah, for sure. I think one thing I noticed this week was the best performing top 100 cryptocurrency was Neo, which, was colloquially known as sort of Ethereum, China's version of Ethereum back in the day. That's now up to rank 60, up 22% over the past 7 days. Unsure whether they fundamentally announced anything as a project, but I did notice when I was looking at the supported assets that Neo wasn't really on any of those indexes. Things might have changed since. It's been a couple of weeks, but I think this is more just a reflection of a narrative trade that China, quote unquote, is opening again to crypto. But I haven't actually seen that there's that much support, if any, for trading Neo. So it's kind of a reminder that even in the bear market, you can get these narrative trades, so to speak. If this was happening in the bull market, this would be a lot more amplified. But yeah, just an interesting sort of observation there.
Yeah, I think at the high level, then, one thing to take away from this is just essentially that it gives centralized exchanges in China the ability to service
Mm.
Chinese Hong Kong users. So that's a big takeaway out of all this, and we're going to see whether that results in higher demand come if sentiment changes in the crypto market. Now we're going to see a lot, well, billions of users start to access these services.
Yeah, for sure. I'm very keen to see, call it the middle of June, start to get some data in about how much of an impact has this made since the June 1
Mm.
sort of opening. Has it led to higher volumes? Maybe we'll have to wait till the end of June maybe to see if there's a consistent uptick, but it would be encouraging if that was the case. We'll move on to Ledger here, and as we covered in recent weeks, it was a bit of controversy around Ledger's new service called Ledger Recover. And in the time since, the company has announced that they're going to postpone that launch of that service. So they announced a bunch of steps that kind of addressed a lot of criticism from the public. They announced some steps that they're going to incrementally sort of release and update the community on, which did kind of ease some of the concerns from the public. But I suppose Ledger here responding to a lot of the criticism is the end of the day.
Yeah, I saw the big one there was just that they're not going to release their wallet recovery feature until they've sort of accelerated their open source roadmap. So I think a lot to look out for. And so if you're a Ledger holder at the moment, I don't think you have to worry about any of those firmware upgrades at the moment. I think come a couple more months when they've upgraded and open source a lot of the things, we're going to potentially see this talked a bit more, and users will have the opportunity then to decide whether they want to stay with Ledger, whether they're okay with those security trade-offs, or whether they just want to ditch Ledger altogether. So be curious to see. I saw Trezor sales went up 900% as well, so they're definitely feeling it.
Yeah, wow, that's quite telling. We will move on to DCG here, Digital Currency Group. They've been in an ongoing sort of legal battle with many crypto companies, most notably I think sort of Gemini, the exchange there in the US. They missed a critical deadline. Do you know more about this one, Nick?
Yeah, so Digital Currency Group are in this kind of bit of standoff with Exchange Gemini because DCG's one of their big trading hubs was Genesis, and that faced liquidation and bankruptcy earlier in the year. So they've still got a lot of money that is owed to Gemini, but it looks like DCG have not been able to meet this deadline to pay off some of its potential debt. So this is really up in the air at the moment, and we're really unsure about what the state is of DCG and what their balance sheet looks like, because everybody is just speculating at this stage. But they're one of the biggest and longest and most proven crypto company in the industry. So that's one hanging over the head because it's not a small amount by any means. We're talking $1 billion of potential debt in its life cycle, and about $330 million of debt that is payable in the short term. So a lot of issues there with DCG. And this is just a wait and see at the moment, whether they're going to come up with a new arrangement, whether they're going to go to court, whether it's going to take a nasty turn. But I'm not sure if any issues come out because we saw that they pulled the plug on one of their institutional trading platforms. So they cited this to the market downturn. But I'm also really curious to know if that's just one of the plugs they're pulling to try and save costs. And we'll just have to see how they go because Grayscale, one of their biggest cash cows and most profitable businesses, actually is in a standoff at the moment trying to get their ETF launched. But as I think we were talking last week, Matt, that it's this interesting trade-off at the moment because if that ETF does get approved, that just means that potentially the fees that it gets could go trickle closer to zero than the high 2 to 3% that they're taking. So they're kind of in a bind there that if it gets passed, then their cash cow may earn less revenue potentially, although that could always be combated by higher uptake of the ETF by everyday people.
Yeah, for sure. I watched this space as again sort of a result of the disastrous 2023 is cleanup continues from a lot of these different companies, and DCG is definitely one that's dealing with a lot as well. So one that again was actually I think an investor in FTX, one of many was Paradigm. So they are one of the biggest, most established crypto funds in the space. And well, as of last week, they announced their was revealed. Yeah, they're going to be more than a crypto fund. So branching into other areas, most notably AI, which is seeing a lot of venture interest, of course, this year, as well as a record amount of sort of users as well, the likes of Chat GPT and whatnot. So yeah, again, another sign that maybe there just isn't that many promising crypto sort of startups out there to invest in. Because as Nick and I have been reporting on all these past few years, especially last year, there was an influx of venture capital or also like limited partners sort of investing into funds, and they had bucket loads of cash. And obviously, it's only been 1 year, and a lot of these are 5 or 10 year funds, so they've only invested a small amount of it. So I suppose a lot of them are there left with ample sort of cash on the sidelines. Maybe this AI sort of extension for Paradigm might just be a reflection of that. Maybe Nick.
Yeah, I'm in the same boat that it's unsure whether it's a bad thing in the short term. When a lot of people are saying, oh, they're pivoting to what the next thing, or they're getting outside of crypto because potentially the regulation's too harsh and they're struggling to find funds or they want to diversify. But I think that's a very compelling reason that perhaps all these funds have just raised billions and billions of dollars. We think about A16Z, who raised, I think, a $4.6 billion funds. It's a lot of money, but at the end of the day, if there aren't that high quality um, projects in the space, potentially they've just over raised money, and now we're in a situation where they have to diversify their, I guess, core focus.
Yeah, that's it. So we'll watch this space, and there is still announcements being coming out every week about new raises. I think we'll get into one of those later. But yeah, it's very noticeably dropped off, as it has in the whole sort of venture space, particularly tech and those sort of early stage startups as well. So yeah, we will move on to reports last week from I think it was Reuters that reports from insiders that previously worked at Binance that they're saying that the exchange commingled customer funds. I think it was ultimately it was a report. So I guess treat it however how to what degree you believe in it. It's kind of up to you. I suppose the key sort of takeaway is just for Binance users, as it really with any exchange, but Binance in particular, there continues to be a lot of unknown around it. So if you are a Binance user and you have all of your cryptocurrencies on there, for example, just another reminder to just strongly consider maybe setting up a wallet outside of the exchange, which we always encourage here at Collective Shift to just put that cryptocurrency into your own control and your own custody, so you don't have to keep trusting or relying that these exchanges are all operating really smoothly. As we saw with FTX, a lot of users unfortunately lost a lot of funds there. All right, we will move on to our the projects that our news that we're most looking forward to, events coming up in the space. This one I'll hand over to you, Nick, with regards to Coinbase.
Yeah, so the first announcement we saw here was Coinbase, who was creating their base Ethereum sort of scaling solution to uh, potentially inherit some of Ethereum security, but having a platform that you can allow much lower fees to transact on. So this is currently in testnet at the moment, but they just this week released their path to mainnet, which involves an important step forward via Optimism, which is another sort of Ethereum infrastructure platform that is trying to help scale the ecosystem. Um, they really need that one of the big core upgrades to go live before they can even think about their mainnet. So this is going to be a big milestone once Optimism launches its a lot of upgrades, and then they just release the path forward, which is essentially just greater testing, greater security, greater audits, and they just sort of released a soft timeline without any hard dates. But I'm sort of expecting, from what I've seen in the industry of other Ethereum platforms that have created testnets and launched their mainnet, which is probably in the space of a year. So I'll be surprised if we see it before the end of the year, to be honest. But I wouldn't put it past it, especially knowing the resources at Coinbase. They can really accelerate that timeline, I think, if they want. But I think it's going to get really close, to be honest. So this is probably the one thing I'm looking forward to for the rest of the year, and definitely for 2024.
Yeah, nice one there. I think one I'm most looking forward to would be I think Bedrock. We discussed it, I think last week, but I think that will be going live by the time of our next recording. So yeah, very exciting one there for one of the major sort of L2 solutions on Ethereum. Alrighty, as we do move on to a bit of rapid fire, Nick. A lot of things flying at us every day, and the crypto community out there. There's a lot of things that get missed, or a lot of things that get hyped up unnecessarily. What is your one for this week that you really wanted to highlight?
This one is looking back on the Ethereum change in withdrawals. There's a lot of questions exactly about how the Ethereum price would stand up, whether their network will stand up, whether we were going to see a lot of uh, validators who help secure Ethereum leave, or a lot of people go to sell their stake in or their ETH. What we actually saw is that the initial validators, those helping secure Ethereum and earning rewards, they have really dropped off, and it's went hard downwards. And what we're seeing is that we're seeing record validators waiting to validate Ethereum, essentially. So if you want to become Ethereum, you want to become a validator on Ethereum, you just cannot rock up to the party and get admitted in. You have to wait in a queue. It's actually quite a long queue. So then you can finally be activated. So this queue lasts about a month. It can take a while to get up and active, and we're seeing, I think, something like 70,000 validators waiting to be activated. So what we're seeing with this withdrawals is that it really has sort of de-risked it in a significant way, and we're seeing uh, people wanting to secure Ethereum as validators, and we're seeing uh, really little people looking to leave now after that initial spike has happened. And so we saw a lot of positives, and the ETH total stake has also started to climb from 15% when withdrawals went live towards 18% so it's only been about a month, but we're already seeing a lot of positives in the Ethereum ecosystem, which I was really excited to look out for. And it's kind of playing out, I think, the way that we've been reporting it may have.
Yeah, already up to 80% is quite surprising for sure. I'll drop this website in the show notes as well. Here's, as you said, Nick, there's currently no one waiting to get out, but there's roughly, yeah, over 900 hours you'll have to wait if you want to, start and create a validator on Ethereum. So yeah, really strong demand there to stake and help secure the Ethereum network. Um,
What
one
about you there,
there
Matt? What was catching your eye this week?
For me, one was Solana's sort of, growth in one particular metric. So a bit of a, I guess, lesson here for those of you who are maybe um, analyzing projects. As I will get up on my screen here, you might be looking at Solana on this Dune dashboard, and you see there's a really strong uptick in active users, and normally that's like very encouraging if you just looked at that in isolation. um, but then if you go over to some other metrics, so that was daily active users, and I will get up on my screen here some other ones. So you might then wonder, okay, then you would expect to see transactions, addresses, TVL, DEX volumes all rising, like at maybe not the same levels, but at least some sort of rise. And interestingly, here they haven't like risen. So it's kind of, I guess what caught my eye was that the users, daily active users, like grew, astronomically last week. However, that was not really reflected in these other metrics. So a bit of a lesson there for people who are analyzing, prospective, crypto investments and whatnot, to really just, make sure you're checking across a few metrics, because they can sometimes tell different stories. In this case, like the reason for that really strong uptick in users was because of the recent migration over to Solana from Helium. So we've been covering that, on Collective Shift for, as it happened earlier this year. So just the way, I suppose, to really dumb it down, the way that Helium now works on Solana involves there being a lot of like new users. So therefore, if you just looked at that in isolation, you might have got extremely bullish on Solana, but not really reflected in the other metrics. So
I'm glad you
that was
brought that one
something
up,
I
Matt, because
noticed.
I saw a similar thing actually. That when I was looking at the Solana metrics, that that big uptick, and actually saw a lot of talk on Twitter. Some people actually did a bit of digging it as well, and they looked at how how many contracts did those new addresses interact with, and it appears a vast majority of these new millions of accounts or addresses only interacted with one other contract, and it didn't really stay and connect and do a lot of transactions that you would like to see as a potential new user. So whether it's a similar user spinning off and creating multiple addresses to interact with these NFTs, or with one particular platform, which it looks like what we've seen is that it's not clearly organic in terms of sustained users entering the ecosystem.
Yeah, for sure. And that's something we've discussed a lot over the years. I think, Nick, in terms of like any metric out there that can be gamified, sort of will be gamified. In this case, yeah, it's possible that, there may be some accounts like creating or paying for new addresses, which is definitely happened in the past with a lot of other blockchains, just trying to get some attraction, trying to get some attention, really, to be like, hey, there's a lot of people using my blockchain, come over users, come over developers. But as you said, looking at across the different metrics to see that sustained sort of level is like extremely important. We saw TVL be gamified heavily in like 2018 through to 2021, and now it got a bit more sophisticated, the average crypto investor or analyst, but you can still see other metrics such as usage and other, TVL still gets looked at, but other ones still pretty be gamified. So just always have your skeptical hat on, and yeah, education obviously is the best way to counteract this.
Yeah, I know we were talking about even looking at Ethereum L2s this last week, and looking at uh, where does a lot of the activity ride, and how do you uh, look at these metrics to take away something that can really be useful, and seeing which ones are or have sustainable development, have sustainable ecosystems. And one I think that stood out to me was looking at wrapped ETH, which is on a lot of different blockchains and L2s. And that could be a potential metric to pay attention to as well, because we saw that Arbitrum had, I think, more wrapped ETH on its network than all of the other Ethereum L2s combined. So that's a really big metric, and takeaway you can see at some organic, really growth, organic usage, because wrapped ETH is really essential to ecosystem and people playing around in the Ethereum land and doing lots of different things in Web3.
Yeah, well said. So we will leave it there on a bit of an educational note. So that is a wrap for this week. If you are looking for more insights, see our revamped Weekly Shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.